Welcome to the daily stock review. Today we're going over REA Group. It's a real estate business in Australia. It looks after realestate.com. Goal of this channel is to uncover the world's best stocks that have 100x potential. I'm an individual investor on the journey. I'm just 2,500 hours in over the last 7 years. And I'm sharing the lessons along the way. So we're going to go over the stock analysis. Here's my investing process. Look at where to look first, and then I'll go over the 5-minute check that we're going to do in this video. Learnt from these guys. They did pretty well for themselves over a few decades, and I want to follow the breadcrumbs that those guys have left behind so that we can follow in their footsteps. Let's jump right into it. So realestate.com is been around quite a while, got them in 1999 as soon as the internet really popped off, and in the last 5 years it's kind of over that period ended up pretty flat. There's a significant part of growth, and then it's kind of decreasing at the moment, just in terms of what people are willing to pay for it. So REA Group, here's the brands that they have. The most recognisable one for the majority of Australians would be realestate.com.au. Now, how did I come across this stock? In our stock investing legends community, one of the members has put it up and had came across it while they were trying to sell their own house, and they realized that between REA Group or realestate.com and one of the competitors, which was Domain, realestate.com had a significant price difference and they were a lot more expensive. So noticing that kind of duopoly in the marketplace, it was like, let's jump straight on it and have a look at what this business actually makes. Is it actually converting that cash, extra money and pricing power it's got into a competitive advantage? And we'll have a look at that in a sec. So that's pretty much where we came across it. Let's go and do our 5-minute check. So we get into the annual report. Since this is an Australian company, it's not in a kind of easily standardized and basic format like the US 10K. But what I want to do is I just want to get to these. Consolidated income statement. So it's in millions. So we've got 1.3 to 1.56 revenue from property and online advertising, revenue from financial services, expense from franchisee commissions, and then revenue, blah, blah, blah. Total operating income. What's it come out to be? So 1.45 to 1.67 billion. So REA Group's pretty significant. Employee benefits and expenses. So now we've got a few bits and pieces that come out. All I'm looking for here is anything kind of substantial and that is different from year to year. So any kind of large, big one-off kind of payments and things like that. So there's a minor one here, net gain or disposal, acquisition of associates. We've got impairment or reversal. So we've got an impairment expense, and then we've got either the reversal of that the following year, and then share of losses from associates. So that's pretty much the same. Profit for the year. So we've got net income at the end of the day is 293 million, and then it's jumped up to 669. All right. So, and a portion of that is related to, where is it? These two non-cash charges. So all that means is that didn't cost the business physically 127 million, and they didn't gain 110 million in cash. That's just accounting magic to make the income statement function. Let's just say that. It's so that if parts of the business that they had previously purchased at a certain value are then recognized for the value that it actually makes for the business. But it doesn't account for the cash, and that's why we've also got a cash flow statement. So on our balance sheet, just want to make sure the business is kind of healthy, doesn't have too much debt and things like that. Cash and cash equivalents, Total current assets is 946 million. Total assets altogether, which includes, non-current assets, is 2.8 billion. Liabilities, so current liabilities, about half of the assets, and total non-current is a lot less. So total liabilities is definitely a lot less than our total assets. Now, is there anything significant there in terms of debt? Interest-bearing loans and borrowings? Not a lot. And commission liabilities. So there's a bit there. But nothing kind of significant that pops out that says, yep, there's going to be a call on them to repay a significant amount of debt and they don't have the cash for it. It looks like they do have the cash and there isn't any big debt sitting there. All right. Changes in equity, don't really care about that at this point. Cash flows. So we want to see, this gives us a better picture of where the cash is flowing in and out of the business. And in looking at it so far, the three things that I want to see in this 5-minute check is mastery. So has the business mastered its customer? And it looks like that, it's seeing some growth and it's quite an established business. So being 20 years old and on the internet, it's still increasing, which is good to see. What else have we got? The moat around the business. What I do want to see is some margins within the business. Doesn't look like that's crazy, and it looks a little bit more difficult to see with these non-cash charges bouncing around in the income statement. So what I want to see from this is how healthy is the free cash flow of the business. And management is the third one. And I want to see, is it actually being rational with how it's spending the company's money? So you can see that as we go through this. Where are they actually investing the money? Is it going to help the business in the long term and help long-term shareholders? All right. So we start off, we got 1.8 and 2.2 billion. We've got payments that pretty much come straight out. And then we've got net cash inflow from operating activities. So that has grown and up from 589 or 590 to 675. So just under 100 million within a year pretty much. What else have we got? So cash flows from investing activities. So property, plant, and equipment is pretty much nothing. So these guys aren't investing pretty much anything that they don't need to back within the business on terms of that. Payment for investment in associates, payment for intangible assets. So they are spending money on intangibles, which for this business, they're just having a look and realizing, it is maintaining that onward software platform and things like that. There is a software infrastructure and things like that needs to go into it. So it would make sense that property, plant, equipment, and our intangible assets are actually things that they need to continue to pour money into to maintain that competitive advantage. And so that's something that we want to look at over a number of years and see, is it continuing at that kind of rate? So 120 to 131. If we wanted to go back to 23, 22, 21, 20, etc. in the years, we want to see what that trend is doing. As long as it's increasing and it's not outpacing the growth of revenue and the cash that it's generating, that's a good sign. So what does that mean for us? So we can get this number here and subtract these ongoing things that are required to maintain the business's competitive advantage. Even with that, we take 130 away from 675. We're still left with a pretty substantial amount of money. So that's still over 500 million that we've got there in terms of cash that the business can pretty much do what it likes with. So we come down here, they've got proceeds of sales of financial assets. We've got dividends that the company's paying, so it's pouring a significant amount of that back out to shareholders in terms of dividends. Payment for acquisition of treasury shares, proceeds from borrowings, and then repayment of borrowings. So it's spent a significant amount paying off the borrowings and leases as well. All right. And then cash and cash equivalents on hand, just maintaining a comfortable cash position. So is this business making a lot of money? I'd say yeah. What do we got? 675 minus that, we're at like 500, little over 500 million compared to 2.2 billion. So it's a little bit under. It's like about a 20%, or free cash flow being 20% of the revenue that this business makes, which is pretty significant. What we would want to do, having a look further at the business, is compare it to its competitors, as well as have a look at a few of these numbers in particular. So, all right, let's have a look at the intangibles. We really want to make sure the assets of the business that have all this amount of money on is actually valuable, and what are they actually spending it on, and things like that. What else have we got? So is this business worth looking into? Given its current price, I guess management, for me, a really good sign is, I know there's always a mix between companies paying dividends or companies repurchasing shares. Dividends is kind of a short-term play, in my opinion, and just having a look at the different options that are available for that company to reinvest that money. So if you're getting a surplus of money, you got 500 million that you don't know what to do with as a company and the management team, you obviously want to invest in the business. You want to invest in branding to make sure that realestate.com and its other brands continue to grow, reach new customers, and build that revenue base for it. Then we also want to make sure the software and the assets are actually good. The product of the business is obviously their platform for putting your houses up for sale and things like that. So making sure it's accessible, it's reliable, and things like that. So what else have we got? Now, if we've still got cash left over at the end of the day, we want to be thinking more as long term as possible. And so if the share price of the business is significantly depressed, or it's at a discount to what the business and the financial team believe the true value of the business to be, then a better option than just providing dividends is to repurchase those shares off the market. What that does is it makes existing shareholders, it makes their slice of the pie a little bit bigger. Effectively gives a little bit back to you guys. So when we go to dividends, it pretty much just hands it off to the shareholders and says, there you go, do with it what you will. Some of those options are repurchasing, or do you just want to repurchase shares on the market and get as many as you can for that price, or you can just pocket it. Some people, investors or traders, just like having a portfolio of dividend businesses. Pretty much they just print cash and they take those dividends and the cash flow that's generated from that, which is its own kind of market for where this business might fit. Now, is it something interesting? Do I think it's going to 100x? Do I think it's going to 10x over time? Probably, but I don't know if the growth is there. And what I'm seeing in the financials where they're investing, there's no rapid amount of investment opportunities that these guys are investing in. They're putting over half of the money in free cash flow is coming out just in terms of dividends. The other half's repaying borrowings and leases. And the other part of that would be, what do they do in these years when now they don't have these borrowings that need to be repaid? Do they just put double the dividend that comes out? Or are they going to have opportunities to expand into new markets, continue the growth of the revenue, which will increase long-term value? So for me, I wouldn't be looking at this one further. For you, it might, especially if you know a little bit more about the company and you have a bit more interest in it. But it's definitely an interesting investment. It's definitely pumping out a lot of cash. It's just, for me, the management team at this stage isn't jumping out at me as, yep, this is going to be amazing. So if you guys have any other questions, you got any comments, feel free to drop them down below. If you've got any stocks that you'd like to, or me to have a look at and review for the rest of the world, then feel free to drop those as well. Appreciate it. And if you would like, I'm dropping a number of these videos each day. So if you'd like to subscribe, do that, and then you'll get a notification when they pop through. That is pretty much it from me. If you'd like to watch this next video, YouTube reckons you'll like it. Cheers.